Alright guys, Gen Z Archer here, and today we got a portfolio update video for the week. So if you guys seen my last video, the account was sitting around $150,000, and right now we're at 150.5. So it really hasn't changed much, value wise. But I believe that's pretty much because, as you can see, QQQ last week was at about 520, 518, and now it went down to 508. So the equities in the account probably dragged the account down, although our options trades pretty much brought the account back up, but I guess it balanced each other out, so that's why we're stuck at 150 for the week. This week you can see the only thing currently open, which is pretty much the hymns contract that we did a 1 week trade on, but we ended up having the trade go against us, so we had to roll it out 1 month, and that's where we are at with hymns. A $53 strike for 613. We opened it about 515. I will say this, that we were playing it very risky this week. Maybe not risky, but dicey. A better way to say it for me is a calculated play. You can see we kind of got assigned on United Healthcare right here. We got assigned on 100 shares, so that trade went against us. I will say this, I will say that I knew this could easily drop just because of, what's going on with the company, but the premiums were a lot, so I felt like it was a really good possible risk play. If you guys aren't aware what United Healthcare, then essentially, this thing has been spiraling down for the last couple months, if not half a year. Essentially, the CEO, he got, I guess, killed, and then you fast forward a little, you got the Liberation Day stuff. The tariffs brought this thing down more, and it was kind of recovering, but then recently, there's a Department of Justice probe into the company, I guess looking for fraud, so that's another thing. And then also they missed their financials, so that brought it down even more. So they pretty much got shafted for the last 6 months, and that's where we are at currently. You can look at the 1 year chart, and well, actually, let's look at the year-to-date chart. It's I guess closer. I feel like it's a possible discount, and I want to be clear, guys. A discount is only a discount if the price goes back up again in the future. If it doesn't go up again, in the future, it wasn't a discount. You got bagged. And I mean, just look at Liberation Day, for example. I don't remember the exact date, but with the tariff stuff, we went down a bunch, and for the lowest in the last 4 months, right, it went down to $461 during the crazy tariff news month where it was just going down and down and down for every stock basically. So if the tariff stuff brought us down to 461, and then currently we were at a low of currently we're at 294, below $300, I feel like this could be a possible great buying opportunity. And to be clear, this is not financial advice. This is what I'm doing. I'm not telling you guys to do these trades. But yeah, the premiums were good, and I was just willing to take the gamble on United Healthcare. This company is worth, I believe, over $200 billion, so it's not going to go anywhere overnight, So I feel like this was a very good risk play, and this was beaten down a lot so much already. Plus, the CEO and management has been buying the stock, which is kind of bullish in my opinion, because it means they believe, obviously, if management believes the company is going to go up in value over time, they're going to be buying, right? So that's what them buying signaled to me. To take a closer look, we gotta look at our trades, and we didn't do many trades this week, even less than last week. Although if you look at the P&L, last week we made $1,100, this week we made $1,400, so we made more this week. So even though it's less trades versus the week before, we made more money. Now, to be clear, we were doing QQQ and United Healthcare, just one contract. On Wednesday, so let's say 521, right? 521, we were doing QQQ, and essentially we closed early for $10 and $8. We bought to close these two contracts. And then this was the mindset, guys. In my mind, I was like, well, each QQQ contract per day needs to produce about $62 to meet my minimum goal per day, right? But I was thinking, if I opened up 2 more QQQ contracts right after closing these contracts on Wednesday, it wouldn't have brought in another $62, right? It probably would have brought in another $20 per contract. So that wasn't really worth it in my opinion. And if I kept the capital to do QQQ contracts on Thursday and Friday, that would be let's say $65, $130 for, Thursday and Friday. But then I was looking at United Healthcare, and I was like, well, instead of doing QQQ and making $130 for the next 2 days on each contract, I could do United Healthcare where the premium was higher. And then that's exactly what I did. I opened up one contract here, here, and here. You can see we opened up a $300 strike. This was where we got assigned at, and as you can see, because we got assigned, we got the full premium when it expired on Friday. We had a 295 put and we had a 290 put that we took profit on. So originally we got 246 and 161. We bought to close for $90 and $59. But remember, guys, I said if I did QQQ, then each contract would have generated $65 a day or so, $130 in 2 days. This right here produced $156. If you add this to this, that's over $130. So I mean, we're already above our goal already. So that alone is over $130. That's more than what I would have made if I just kept my capital doing QQQ contracts. The caveat is QQQ also fell, so I probably would have got signed on those contracts anyways if I opened up, these contracts on Thursday and Friday. Yes, you could say on United Healthcare $300 strike, I could have rolled it down and out. Yes, I could have rolled. I didn't though, because again, I was looking at the price and I was like, well, the real cost basis is 296.3. This thing has been beaten down so much. I was kind of just willing to risk owning these shares and just hoping it goes up in price in the future, because it's beaten down so much. Surely it doesn't drop even more, right? This thing's a blue chip company. This company isn't going to go anywhere. So unless there's actual real hard fraud, then I feel like this is a buy the dip opportunity. And that's why instead of rolling the position, I just took the assignment. I got 100 shares now, and I'll try to run covered calls on it, but pretty much the idea is this is possibly a appreciation play. But yeah, it was kind of dicey though earlier in the week when the market started going down on QQQ and whatnot. I mean, again, I had 4 open United Healthcare contracts. All right, I'm all right with getting assigned on 100 shares or 1 contract, but I did not want to get assigned on 4 contracts. We went down to about about $292, and that was when I was scared, a little bit scared, because again, our lowest strike was 292.5. Everything else was above 2. Well, actually, we did have a contract at 290, but either way, I was getting scared because you can see this thing went down to 295, 294. I think it was at 292 earlier in the week, and that thing had me a little sweating. But we didn't get shaken out of our position. We held it, and it started going back up slightly. Pretty much state of decay kicked in. Like, look, we're at $294, and our strike was at, if I can find it, 295. That's very close, but data decay kicked in and we were able to make $156 from that position. We can look at our income holdings page, and currently we're at 28% of the way to our 2025 goal of $41,000. So almost at the 1/3 mark. We're making progress week by week, brick by brick. But yeah, that's pretty much what we did this week. What we're gonna be doing next week, I want to see what the market does, but we're probably gonna go back to QQQ. Although I'm not gonna lie though, if the market for some reason, hopefully it gaps up on Monday, then, or actually Tuesday, because there's no market on Monday. So if the market does gap up on Tuesday, I'm probably gonna just sell the shares outright and then run 2 QQQ contract puts again like normal, and then with the rest of my cash, we are going to try to run another United Healthcare, I guess, put. Remember, with my account, we can afford 2 QQQ contracts per day, and then we got about 30K capital left in the account. And guess what? United Healthcare at $300, that's pretty much 30K right there. That's the perfect amount of money that I can spend on puts, where I know this is a very big, I guess, dip. So it's worth the risk to reward, in my opinion. And then also the premiums are so high, and this doesn't affect me if it gets assigned again, or if I'm stuck holding this, because I'm able to afford 2 QQQ contracts still. But anyways, guys, that's pretty much what I did this week. Hopefully you guys tune in for next week. If you made it this far, then hopefully you guys join our public Discord. We are just a community investing Discord. I'll leave the link inside the description. Thank you for watching.